I, I think gold will be much higher. But let's see when we will reach $3,000, because if gold is at $3,000 per ounce, our average gold-related investment will be up 2, 3, 400%. So we will be happy with that. I think gold will witness this revaluation process, and that might take a few years to play out. And then you'll see gold, you might see gold at 8,000, 10,000, or maybe even higher.
The recent surge in gold prices may have been initially prompted by speculation surrounding the US Federal Reserve's anticipated shift toward looser monetary policy. However, the roots of this record-breaking rally can be traced back to China. While Western investors were selling off gold holdings amid rising interest rates, central banks in emerging markets, particularly China, were making massive purchases, bolstering global demand for the precious metal. A significant shift occurred in late 2022 and the first months of 2023, when the East began driving up the price of gold, challenging the West's traditional pricing power. This shift disrupted the dynamics of the gold market, as Western institutions, which typically influenced gold prices based on real interest rates, became net sellers despite relatively flat real rates. Instead, Eastern central banks and private demand from countries like Turkey and China lifted the price of gold during this period. Over the past 15 years, there has been a significant shift in the distribution of gold, moving from the West to the East, a trend that Willem Middelkoop, author of The Big Reset, sees as significant. Concurrently, the US has been accumulating debt at an alarming rate, triggering dissatisfaction with Western policies across more than 140 countries. This dissatisfaction has fueled a growing sentiment among institutional investors to seek refuge in gold as a hedge against the uncertainties associated with the dollar. As the dollar continues to be used as a geopolitical tool by the US, gold is increasingly weaponized by non-Western countries in response, reshaping the geopolitical landscape profoundly. By increasing their gold reserves and using gold in international transactions, these countries can reduce their dependence on the dollar and assert their sovereignty in the face of US dominance. Looking ahead, Willem foresees gold prices rising, possibly reaching $5,000 or higher by 2030, with a revaluation process potentially pushing prices to $8,000 to $10,000 per ounce or beyond. We will present clips from Willem Middelkoop's interview with SOAR Financially. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
We see a new war, you could say, between the West and the rest of the world. We see the BRICS countries, the BRICS alliance, starting to fight the Western dollar system, the paper dollar system. Of course, we know that gold and silver prices were always manipulated through the paper futures COMEX system, LBMA system. And now gold has been moving from west to east in the last 15 years. I think it's no coincidence that we see many Wall Street executives traveling to Shanghai, and also some important members of the US government traveling to China. And it's no coincidence that the Chinese aren't visiting the US, but all these people from the US are visiting China. I think some discussions are being done at the highest level, and we all know that the US just can't continue with growing its debt 1 trillion in every 100 days. So people are starting to look at the anti-dollar, and that's gold. And we see massive amounts of trading at the Shanghai Gold Exchange. Don't forget, gold was trading just north of $1,000 early 2016. That was the bottom of the whole precious metals and commodity space. And especially after the start of the COVID crisis and then the Ukraine war, the geopolitical situation got very tense. You could actually say that we're in the very early innings of a hybrid, well, world war or world conflict. And this is a totally different conflict compared to the 1940s or the First World War. But there is this monumental shift in which over 140 countries tell the US they are fed up with the Western double standards. They are fed up with Western hypocrisy. And now with the conflict in the Middle East added to this, it's a very explosive situation. And many institutional investors will never invest in gold unless there's a threat of war. And I think some prominent sovereign players, central banks, are adding a lot of gold to their reserves. So not only China, not only Russia, but even a country like Poland is growing their national gold reserves 10x. So this deglobalization in which the West is trying to decouple from China, this has just started, and this will have repercussions for decades. So we're just starting in this process, and I'm not surprised that gold is being weaponized by the non-Western countries in a way the dollar has been weaponized by the US. So it's just a countermeasure of the non-Western alliance.
Over the past year, China has significantly reduced its holdings of US Treasuries, selling over $74 billion worth, according to recent data from the Treasury Department. This trend continued as China reduced its holdings from $849 billion to $775 billion between Q2 2023 and Q2 2024, hitting the lowest point since 2009. With China refraining from purchasing new treasuries for the past 6 to 7 years, conventional financing of US budget deficits has become challenging. In response to this challenge, Willem notes that the US is changing regulations to let domestic banks invest more in treasuries without showing them on their balance sheets. This hints at a potential return to quantitative easing, QE. The recent movement in the gold market suggests anticipation of QE as a response to the projected budget deficit surpassing $2 trillion in the coming years. While discussing the performance of mining stocks, Willem notes a noticeable lag compared to the performance of gold. Despite recent breakouts and positive trends, mining stocks still trailed gold's performance. Typically, gold leads the way, followed by silver and mining stocks. While gold has recently broken out, silver stocks are just starting to follow suit. This signals the beginning of a recovery, with significant gains anticipated in the near future, reflecting past cycles where double-digit returns were frequent. Let's get back to the interview.
These US leaders traveling to China, they must be in real trouble. Otherwise, they would just wait for the Chinese to come to them. But the Chinese aren't buying any new treasuries. They haven't been buying any new treasuries for, let's say, the last 6-7 years. So the US is no longer able to finance their budget deficits by selling treasuries to the normal international clients. So actually, they're changing the rules as we speak to make it possible for the US banks to start to invest massively in US treasuries again and don't have them show up on their balance sheet. So QE will start very soon, and this is what gold is telling you. I see a budget deficit, I think north of 2 trillion for years to come. So please explain to me how the US can solve this budget deficit without the help of traditional friends like China and all the other countries buying up the treasuries. So the normal off-takers aren't willing to buy the treasuries anymore. So how can you have a situation you don't have QE when you have a budget deficit of 2 trillion for years to come? Last time we spoke, I think we discussed that we were just waiting for this breakout. It was just a matter of weeks or months. And now we have this breakout from this 4-year sideways pattern, which had a bottom around 1700 and had resistance at 2000, 2100. So now we have this powerful breakout, but that has only happened quite recently. And look at silver. Silver stocks are just breaking out for the last 2-3 weeks. And we all know from past cycles that it's first gold breaking out and silver will follow, and then the shares will follow. Sometimes they have a lag of a few months, but our fund is up 20% from the low in the last week of February this year. So the recovery has started, and on average in a recovery year, our fund goes up 70, 80, 90%. So 20% in the first few weeks that's a normal recovery, and you can expect more to come. March was a double-digit return month for our fund, was plus 12%. On a normal recovery year, we have 4, 5, 6 double-digit return months. Because most of the recovery still has to play out.
If the trend of gold moving to the east continues, it could have profound implications for the global economy and financial landscape. As Eastern institutions, led by central banks like China's, accumulate more gold reserves, they may gain greater influence over the gold market. This trend might challenge Western dominance, propelling gold prices to unprecedented levels, possibly hitting $10,000 as forecasted by Willem. Share your thoughts on Willem's prediction in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Until next time.